800 points in the Dow gone and then recovered fully. Is this now the all-safe signal for investors?
I wouldn't say it's all safe. I mean, there's always the possibility of a recession next year. I think that possibility is low. I'd put it at maybe about 30%. Really, right now, I think it makes more sense to be selective, be defensive. I wouldn't just jump in and invest in the S&P 500 blindly right now.
So, Mark, what does that mean, selective about things? Where exactly are you looking? What types of stocks? What types of industries?
Yeah, so I think what you really need to do is you need to come up with your list of your favorite stocks, right? So good quality balance sheets, strong free cash flow, and a lot of the stocks that we're interested in right now would be in sectors like tech, right? So when you look at tech, we prefer software over semis because it's more defensive. When you look at healthcare, med tech is an area that we love. So companies like Abbott Labs, Intuitive Surgical, and then even when you look at consumer stocks, we're more interested in the off-price names like TJ Maxx.
So, Kenny, I mean, the move that we saw, is this an indication right now that with stocks near record highs, with interest rates right now near historic lows, at least for some parts of the yield curve, with all of those in play, is this now a market that people can feel comfortable investing in?
Well, listen, it's like Mark just said. It depends on where you're investing, right? So in my view, you got to be looking at value names. You got to be looking at strong dividend players. You got to be looking at stocks that have gotten unnecessarily beaten up, in this environment. You shouldn't necessarily, at the moment, at least the way I feel, is put all your money in these high-flying names because we've all seen it. The minute the sentiment turns, the minute the market turns, it's those high flyers get absolutely crushed, right? And so as we go into this environment where yields are plunging and stocks are near their highs and you're concerned about what's going to happen in the next, 6 months, 8 months or year, then you clearly want to be defensive, but you want to be in more value, in my opinion, than growth. But that goes to my personality, is to be more value than growth at the moment.
So Kenny, you spoke about high flyers. You know what's been flying high these days? Longer term, longer maturity treasury bonds, gold, right, the U.S. dollar. Are all of those assets that could fall precipitously if things go the other way for risk?
Well, listen, gold for sure has always been that safe haven asset, right? So when you say fall precipitously, do you mean that if all of a sudden the economy is great and everything goes along and there's no recession, could gold back off? Of course gold could back off, but gold is gold. The same way stocks could back off, if we do go into a recession. So, yeah, once again, you have to kind of pick your spots, and you shouldn't go all in. It should be part of your portfolio, and then you might do it dollar cost averaging. So you take the same amount of money that you're investing. So when prices are high, you're buying less of it, but as prices come in, you buy more of it. And so therefore you kind of maintain that you buy what you like and you take advantage of those price swings. But I wouldn't create this sense that, the end of the world is coming and everybody should get out. Not at all. You just need to create a portfolio that's going to mimic or that's going to take advantage of the environment that we're in, which is what I always say. Investing is dynamic. It's not static. You're constantly kind of assessing and changing and tweaking the portfolio.
Mark, just a few moments left here. It's a big week for retail and the American consumer. Any stocks on your radar because of earnings this week?
Yes. So, I mean, the biggest names we like within retail would be TJ Maxx, right? Because when you have all these articles of clothing that aren't getting sold at Kohl's and Macy's, where do they end up? They end up at a company like TJ Maxx, and the consumer absolutely loves that treasure hunt of experience of actually going in there and trying to find that diamond in the rough. So that's where we'd be in retail.